And I'm not saying this has to happen. I'm saying we could see some kind of a pullback, sort of a reckoning, a digesting of these gains. That because silver's up about 45% since the late February lows. That's just tremendous. It's up about 35% since the year started. That's about almost triple what gold is up. So that's fast and furious. I think we could see some kind of a digesting phase, consolidation, where silver will perhaps test somewhere below 30. My first target would be 28. If we really got a washout, perhaps 26.
As global economic dynamics shift, the silver market is witnessing a transformative movement from west to east. Peter Krauth, a seasoned silver analyst, points to this redistribution of pricing power as a pivotal change, suggesting an ongoing adjustment that could significantly influence investment strategies. This eastward tilt is underscored by recent robust demand for physical silver in key Asian markets, notably China and India, which is persistently driving up prices. In today's episode, we talk about silver supply constraints are becoming increasingly evident. Major futures exchanges and ETFs have seen silver inventories plummet by nearly 40% since 2021, illustrating a tightening market. The current price of silver has sustained above $30, a level not seen in recent years, spurred by both industrial demand and investment flows. Looking ahead, Krauth advises caution, yet sees substantial upside potential. He speculates that while short-term pullbacks are possible as the market digests recent gains, the general trajectory for silver prices seems to be upwards, potentially testing the $50 resistance level soon. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button so you do not miss our daily recaps. Enjoy the episode.
Supplies of silver are limited, and although there have been some considerable above ground stocks of several billion ounces, we've seen that steadily being drawn down over the last several years. In fact, if you look at the three large major futures exchanges, so that's COMEX, LBMA in particular, and then the Shanghai, and you look at also the silver ETFs globally, they've been drained in a considerable to a considerable degree. And there's some research actually from Sprott just a few weeks ago showing that inventories have dropped about 40% since 2021. So this is across the three large futures exchanges that hold above ground silver inventories. So, there's always the pushback, which I don't disagree, that there's a lot of silver that's held, off of, I guess, what would be reported areas. You've got people who own it privately, physical silver, bars and coins. You've got perhaps some high net worth individuals, perhaps even a few sovereigns. But I think the question becomes, because there's the argument that that's a source of silver if the silver price is high enough to start meeting demand, and I agree. I just think that we are in such uncharted waters when it comes to economics in the last several years that I think that, yes, those inventories can and will to some degree come to market, but only under much, much higher silver prices. So I would certainly not, as I say, some bank on that in terms of meeting demand. I would not for quite some time. Exactly right, and that's clearly what the market is telling us. And if you look at what's been happening with with spot silver prices in China in particular, they're trading at $3 to $4 per ounce above what they're trading at in the US, for example. So it tells you that where the demand is for true physical silver, taking delivery of physical silver, because the Shanghai Exchange is a physical futures market. You have to have an ounce there. You have to have a bar there for what for your contract, to back the contract. And so people are buying silver off of that exchange, taking delivery, and they're prepared to pay to $3 to $4 higher. I feel that's a much better representation of true silver price. And I think that we're going to continue to see pricing power shift from west to east. And ultimately, that's going to be good for silver investors. You know, the obvious sort of huge, and for good reason, the obvious big demand factor is China. They control 80% of solar panel manufacturing or more. And that's been growing by leaps and bounds. Demand for silver from solar was up 64% last year alone. Solar now represents 20% of the entire silver market. And what we've been seeing lately is some big news out of India, really. They are working on building the world's largest renewable energy park. This is in Gujarat state in India. It's going to be 5 times the size of Paris. In February alone, silver imports to India represented about 2/3 of 2023's imports, so 1 month. And now we have news that already in the first 4 months of this year, imports into India have surpassed all of last year's imports. So India, despite the sort of overall sort of smaller numbers in terms of silver demand versus China, is really quickly becoming a force to contend with. And I think that we need to start paying attention to what's going on there.
India imports more silver in 4 months than in all of 2023. India's silver imports in the first 4 months of the year have already surpassed the total for all of 2023 on rising demand from the solar panel industry and as investors bet on an outperformance versus gold, government and industry officials told Reuters. Increased imports by the world's biggest silver consumer could support global prices, which are trading near their highest level in more than a decade. India imported a record metric tons of silver during January to April, up from 455 tons in the same period a year ago, said a government official who declined to be named as he was not authorized to talk to the media. India imported a total of tons of silver last year. Almost half of this year's imports have come from the United Arab Emirates to take advantage of lower import duty, said an importer based at Ahmedabad in Gujarat. India generally imposes a 15% import duty on silver. However, the Comprehensive Economic Partnership Agreement signed between India and the UAE in 2022 allows private traders to import silver through the India International Bullion Exchange, paying 9% duty and an extra 3% in value added tax. Now we'll show you more excerpts of the interview. Remember to watch the video to the end so you don't miss out any insights. Let's get back into the episode.
As a deal, yes, especially sort of medium to longer term. I will say that I would not be surprised as we work our way through the summer that we could, and I'm not saying this has to happen. I'm saying we could see some kind of a pullback, sort of a reckoning, a digesting of these gains, that because silver's up about 45% since the late February lows. That's just tremendous. It's up about 35% since the year started. That's about almost triple what gold is up. So that's fast and furious. I think we could see some kind of a digesting phase, consolidation, where silver will perhaps test somewhere below 30. My first target would be 28. If we really got a washout, perhaps 26. But I think that 30 is before long going to start to become a new floor. I've been pretty impressed with how resilient silver has been over the $30 mark, and retesting 32 in the last few days again. So again, if you don't feel like you're exposed enough to silver, and you see it somewhere below 30, I'd say it makes good sense to probably start at least nibbling at it and increasing a position or starting a new position if someone doesn't have any exposure. and build on that. And as I say, it's kind of like the mining stocks, buy in tranches at least, and mitigate your risk. Do what's called dollar cost averaging. But this is a bargain. There's no question. And if you look at, as I say, the pricing in China, for example, up to $4 more per ounce, then people in the West certainly have access to a bargain right now, whether silver is above 30 or not. I mean, so you're right. There's actually very little resistance from once 30 has been clearly established as a new floor. There's not really there are a few stops along the way, to be fair, but I think that you look at technically and going back to 1980, the first time it reached that level, there really is little to no resistance between here and $50. I would absolutely expect, like you said, that we're going to see that tested a few times before actually finally breaking through, like we did 30. In the last 4 years, silver tested 33 times before just breaking out now. So the first time was in August of 2020, right after the pandemic hit, and silver went from, say, $12 to $30, about 140% return in 5 months. Then, and the silver squeeze, which was the end of January in 2021, it also ran up to about $29 or so. So the third time was just in the last month or so when it tested 30 and then just sailed through it. This was, I think, right around a couple of weeks ago in the middle of May. And so really looking quite strong right now. And there's some great work by a friend and colleague, Jordan Roy Byrne, who does some fantastic technical analysis. And he's basically said that this is one of the, silver's technical setup and run ultimately to 50 is going to be one of the biggest technical breakouts of history for any asset class, just because it has been so incredibly long that silver was at the nominal $50 level back in 1980. So a lot to look forward to. First, not that much resistance on the way to 50, and then after that, uncharted waters. I mean, there's no real clear technical upside after that. We've never been truly above 50 for any kind of sustained time. So it's going to be really exciting times. Looking forward to getting there and beyond.
What do you think of Peter's take? Will China continue to buy gold in size? Is America doomed? Post in the comment section down below your honest opinion. Share this video with a gold bug and watch this video right here because it's a perfect fit for you. I see you on the other side.